Just of the biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us here for yet another market recap on Friday, January 13th, 2023. I'm, of course, joined by my wonderful co-host, Jordan Youl with StoneCastle Investment Management. Jordan, Happy New Year.
Yeah, same to you. It's been a great start so far.
So we're starting the year off on January 13th, Friday the 13th, which James Black, our producer, just pointed out. So hopefully we have lots of good things to talk about today and nothing too scary.
Yeah, no, for sure. We're seeing a lot of awesome opportunities in the markets right now, which we're really excited to talk about today.
That's great. Well, listen, it is 2023. I think we left off on December 16th in 2022. It's been a whole month. So we're going to try and compact everything we can in how the market started out in the new year. And it sounds like there is some good stuff happening. We're going to talk about a market overview. You're going to tell us what you're seeing generally in the markets. We're going to talk about CPI numbers again, because that's just what we talk about these days. We're going to talk about the US dollar. We haven't talked about that in a while and what's going on there. And then, of course, we're going to get into some CSE issuer news. So what's going on in general in the markets right now, Jordan?
Yeah, just building off our conversation back in December, we've seen a lot of positive developments occurring within the markets, especially here at home in Canada, to be honest, with a breakdown in the US dollar, which peaked in September. We've seen a lot of rotation back into the miners, whether it's the precious metals or even the base metals. So we're seeing a tremendous opportunity here at home. And, we're not out of the woods yet. We do have a chart of the S&P 500 that I do want to post here, and we still are attempting to break through that declining trend line that has been in place since 2022. So, but, underlying market breadth is broadening out. And what I mean by that is fewer stocks are making new lows, and we're starting to see more broad-based participation across a variety of different sectors and industry groups as the price of the benchmarks are attempting to break out through this overhead resistance area, which is around 4,000 for the S&P 500. But effectively, we'd really like to get above that 4,100 area for the S&P 500. But nevertheless, across the board, we're seeing a lot of longer-term signals starting to improve, what gets us pretty excited for the upcoming year here in 2023 for equity investors.
Awesome news. Is there any particular sectors that you're seeing affected by this good news?
Yeah, absolutely. We still have that tug of war between the value versus growth narrative. Energy, which had a fantastic year last year. Selectively, there are some issuers that are holding their trends, and there's still opportunities within the energy space. But if you compare energy to other sectors, we're seeing industrials, consumer discretionary. But like, as I mentioned at the top of the show here, we're really starting to see the materials and the mining stocks really exhibit strong signs of improving relative strength. And effectively, they're just moving up faster than other issuers within the benchmark. So from a asset allocation perspective at the portfolio level, we reduced our energy exposure as an example, and we've been increasing our exposure to the miners. And, that is creating a tremendous opportunity to generate returns in this challenging market environment.
We talked about this last year, but we saw an incredible amount of financings done in the mining sector for CSE issuers. So it's great to hear that that they're doing well. They've raised some capital in 2022. They're obviously out there executing some programs, and we obviously have kind of the big mining shows that are happening in Q1 that always happen every year. So hopefully this is a good year for the miners.
Yeah, absolutely. And, just for reference, we have the chart of the TSX Venture right here. And what's really fascinating and interesting is that fewer stocks are making new lows. So if you look at the price of the chart, we've broken through that 600 area for the TSX Venture, which is fantastic. And there's upside objectives around that 675 to 700 range. But in the lower panel with those red histograms, that is telling us that back in 2022, there was a lot of distribution and selling pressure in the issuers within this particular benchmark. But if you look at the far bottom right-hand corner, that histogram is now positive, and that's indicating that more stocks within the venture exchange are hitting new highs versus issuers that are hitting new lows. So that ratio is now positive for the first time on this chart, and this goes back about 1 year in terms of duration. So that creates a lot of opportunity. There's more accumulation, interest, and buying power coming into the issuers within the TSX Venture Exchange as well, and that will translate into new financings as well. So as appetite shifts and there's more sentiment becomes a little bit more positive towards the miners and towards the microcaps, there's going to be more financing options that will be presented, in the coming months.
And we'll move on to CPI numbers, but the one thing just to remind kind of our viewers is that when more capital flows into the mining sector, it allows for potential more discoveries, which then just continues to develop the mining sector on an ongoing basis. So that's great news to hear. Okay, let's talk about CPI. Obviously, we talk about CPI a lot these days. The CPI numbers are usually a benchmark used to define what we're seeing as far as inflation, right? There's a few items that aren't included in those numbers, I believe, but we kind of use it as a general benchmark. Is that right?
Yeah, absolutely. There's like CPI and there's core, which excludes certain components within the CPI index. And both variables within those two indices were pretty much in line with consensus. We do have a chart just showing the trend. And I think that's what's really important as investors is, we've seen inflationary pressure come down, and it hasn't been evenly distributed across the components within the CPI index. Like
Jordan, just to interrupt you, Jordan, just to remind people, this is a good chart to be going down, right?
Yeah, absolutely. Yeah, so components like energy prices have come down, and we've seen that translate at the gas pumps, right? Housing costs remain a little bit elevated, but if you look at the U.S. 30-year fixed rate mortgage, in November of 2021, that was around 3%. Last year, it got above 7%, right? And we touched on that in previous shows last year. And the rate of change going from 3% to 7% was pretty drastic and extreme. Well, today it's around 6.3%. So interest rates for financings have come down as well. But the theme and the narrative is really important in that rate of change and that trend line. We want to be heading south. So on Thursday, yesterday, the CPI number came out in the US. It was 6.5. It was in line with consensus, which is great. So the month over month rate of change continues to decline. Canada's CPI number will be released next Tuesday, and the expected print is 6.3%. So as investors, we're just trying to digest the CPI data and figure out, what is the trend? Is it going up? Is it going down? And what the market is expecting moving forward, especially with the FOMC, upcoming meeting on February 1st. So we do have a chart showing the expected probability of what the market's forecasting and expecting the Fed to do for their upcoming February meeting. And there's been a pretty drastic shift from 1 month ago to real time as of today. And the takeaway here is that the market is already pricing in and expecting that the Fed to increase rates by 25 basis points for their upcoming meeting. There's a 92% probability that the Fed is going to hike 25 basis points. So we're still going to be in this rising rate market environment, but we're not really expecting that 50 basis points or 75 basis point increases for these upcoming meetings. And if you look at the right-hand side of the chart, 1 month ago, the market was anticipating 57% of a 25 basis point hike and 37% for a 50 basis point hike. So today, with the CPI number coming down a little bit with that trend line, the market's expecting more rate hikes, but in the denominations of around 25 basis points right now. So that's for the February meeting, as well as the upcoming March meeting as well.
And just to kind of remind people, and this is on the Canadian side, but last year we started 2022 with an overnight rate of 0.25, and we ended off the year at 4.25. There were 7 separate increases in rates in 2022. So although, yes, there'll still be more, or there's a 90 somewhat % chance there'll be another rate increase, it's smaller than what happened in 2022. And hopefully, those CPI numbers have a big impact on that. So inflation does start to come down. Hopefully we can slow down the increases and maybe eventually even kind of bring it back down to some other level. So this is all great news. One question I have for you: you brought up that the market's already positioned itself to be ready for this rate increase. Does the market then still react if the rate increase happens, or is it built in and on that day it comes out?
It's mostly built in and expected. We're expecting the 25 basis point hike, and then it's usually the speech after, right? What is the Fed Chair Jay Powell going to say, shortly after? So, the stock market tends to discount this information in advance, and the fact that it's posted and it's accessible, we're adjusting, the positions and the market based on the expectation that they're going to continue to hike and increase 25 basis points. And, Fed Chair Jay Powell has been pretty transparent in that, we're going to continue to hike, but with smaller dominations.
We're going to slow down forward a
bit. And even if you look at the table, but if you go out, it's not shown obviously on the show here, but if you tab out towards the end of the year, there's a small chance that there might be rate cuts on the tail end around the November meeting. So there's going to be obviously a lot of information between now and then. So I wouldn't put a lot of weight into that, but that's not off the table either. They could either just pause or they could potentially cut in 2023, but we'll just react and really take the evidence at hand and what the market's giving us today.
We also have a whole year
portfolios that way.
Yeah, and we also have a whole new year. We have no idea what potential variants or geopolitical.
There's so many cross-currents taking place. We don't really know, right?
That's right.
And that's what we do, right? At the portfolio level, we're always just trying to generate return and pull out return from what the market's giving us right now, as opposed to trying to make a call and position the portfolio for a potential outcome that may not ever come to fruition. Right. So we're just trying to read the tape, look at the data, and position the portfolio based on what the market's giving us right now.
Great. Okay. We haven't talked about the US dollar in a long time, actually. The US dollar is it's struggling a little bit. What's going on?
Yeah, well, going back to last year, the US dollar went really parabolic. It was the strongest asset class and the top ranked asset class in our asset leadership model. And when we're comparing different asset classes to one another, the US dollar has been, on a tear, and it peaked in September of last year, and it's definitely pulled back, which is a good thing for investors moving forward. I really believe that the US dollar was really a function of sentiment as well, because, with the significant drop off in equities, in addition to fixed income, there was a lot of pessimism out there in the markets from a sentiment perspective. And it was a flight to safety. What do you own in this type of market environment? And that's cash or US dollar. And I think that's also why gold didn't perform well last year. We've had a lot of questions on, well, if inflation was so high, why didn't gold do better? Because it's typically known as an inflationary hedge. Well, I think it was because it was the sentiment in the market. Despite the inflationary pressures, it was definitely a risk-off market environment in 2022. And now we're starting to see that rotate into more of like a neutral offensive tone right now. So the US dollar peaked. And with that trend in the CPI number that we showed, that's causing more of an appetite into the gold miners again, right? So with a weakness US dollar, gold miners are doing well. And what's really important is, looking at the price and the chart just on an absolute basis, we broke through that key area of support around 27.80. And this is the UUP. So this is a very liquid tradable US ETF that tracks the US dollar. So this is one of the proxies we use to gauge, what the US dollar is doing from a technical perspective. And just looking at it, the underlying momentum is, accelerating to the downside, and we've broken that key area of support. So with further weakness in the US dollar should create a lift and a tailwind for equities moving forward.
Now, we talked about this earlier. There is a chance it's very close to what is known as a death cross, which is a technical indicator that shows we might be transitioning from a bull market to a bear market, right?
Yeah, absolutely. So a lot of investors watch the 50-day and the 200-day moving average, and it's just data over those 200-day and 50-day counts, and it just smooths out the information. And effectively, as a technician or as an investor, you want to be looking at the slope. What direction are those moving averages going? And the death cross is when the 50-day moving average, so the shorter term moving average, crosses below that 200-day moving average. And that's defined as the death cross, and it's a bearish negative signal for the
Right.
US dollar. And as of today, we're just a few cents away from that death cross.
On Friday the 13th,
On Friday the
nonetheless,
13th, right? So
right?
yeah, so if we get kind of confirmation and a breakdown based on price and the death cross and these moving averages and what have you, that's just another weight of the evidence indicating that the US dollar is weak, and that creates opportunities in other asset classes like equities and mining stocks, for example.
Right, which is great. Okay, listen, we're going to end off with my favorite portion of the show, which is some CSE issuer news. Currently in Vancouver, there is the LIFT conference. It's a conference that's been around for a while. It is a cannabis-focused conference. I was there yesterday. It was part of their business day, where they had a bunch of great panels, and I believe today the show floor is open. So for anyone in Vancouver looking for something to do today or tomorrow, you can go and check out what cannabis companies are out there, and surviving kind of the troubled markets that they've had over the past little bit. I had a good feeling about the cannabis space. I think that, we still have some hurdles to get through as far as the market goes, but there's some really amazing companies out there that have some great teams, great business plans that they've executed. There's a lot of value there as far as the investment side. So feeling good about the cannabis space. We have a brand new issuer. I had the chance to meet the whole team yesterday. It's an amazing team. CEO was a part of Afria. The CEO was a part of Tilray. Their CFO has been with pharmaceuticals. They're an international brand, Atlas Global Brands. They started trading today. So congratulations to them. They're a global cannabis company. They're operating in Canada and Israel, and they are in the export industry. So they have cultivation, manufacturing, scalability, marketing, distribution, pharmacy, and medical delivery. I believe they said that they're currently in 8 separate countries and intend to expand from there. So congratulations to them. Welcome to the CSE family. Will be great to watch them from there. How are you feeling about cannabis in 2023, Jordan?
I was looking at it today. I was looking at the MSOs ETF, just doing some technical work on the price action of the MSOs. And obviously, it was a challenging year. There was some excitement during the midterm elections last year going into, November and early December, with the expectation or the hope that maybe the SAFE Act was going to be passed by the end of 2022. That didn't happen. So that caused a little bit of selling pressure or distribution across the board in the cannabis sector, in addition to tax loss selling, right? Because obviously it was a challenging year in 2022. But if you look at today moving forward, the MSOs, the price action has been going sideways. And one of the technical indicators that we like to use, like the relative strength index, is the momentum. It's actually turning up. So what we call that a positive momentum divergence. And what that is really telling you is that the sellers are exhausted. There's not a lot of sellers left. So we're seeing more accumulation and buying power through this consolidation phase for these MSO operators, which is fantastic. And then, as you mentioned, from a valuation perspective, there's tremendous value for these companies selectively, especially the MSOs, so which are listed on the CSE. So we think 2023 could be a big turnaround story for the MSOs. We think the underlying share prices could do phenomenally well. We have to get through some catalysts, sector-specific catalysts, but from a price perspective, especially if we shift more from a neutral defensive tone from last year to more of a risk-on, bullish market environment, exciting market environment, that could create a tailwind for the MSOs. So if you like them in 2022 from valuation perspective, from a price perspective, you'll definitely like them right now.
Awesome. Well, this has been a great start to the year, Jordan. I always love having you here, and definitely start off the year right with some great news in the market. So listen, thank you so much. I hope you have a wonderful weekend, and I look forward to seeing you next week.
Looking forward to it. Thanks for having me.